we're about to move into the seasonally strong time of the year, October, November, December. You're going to have Q3 earnings, which are going to be good, right? Estimates are kind of in line where they should be right now. Companies will meet and beat their expectations, probably around the 75% beat rate. That'll be supportive of the markets. Last quarter stock buybacks come into place. There's going to be a lot of buybacks. We are running at the highest level ever for stock buyback announcements on record, right? Well above the 3-year average right now. Companies have just gone crazy with corporate buybacks this year. That'll help support the markets into the year. And of course, you do have a lot of professional managers off sides need to chase the markets to get their portfolios in shape for year-end reporting. So there's 3 key influences that'll help drive the markets in October, November, December. And so here's what you need to know before the bell this morning. Yesterday, markets, just again, kind of continued in its ways, just, not really having any type of big move. We've just been having this very low compression in the markets. And in fact, we're at some of the lowest levels of compressed volatility that we've seen in quite some time. And particularly when we look at the moves of the market within a given day. The market's been just kind of ticking up here very slightly, just 20 basis points, 30 basis points a day, nothing big. A lot of days we're seeing the markets pull back to break even, the rally a little bit off of that. So again, not real strong in terms of its overall action. Very compressed volatility, but again, this is just kind of where the market is right now. There's basically just a slight tilt of more buyers than sellers here. So that's why markets are kind of dragging themselves higher very slowly. But again, doing fine here, nothing wrong with the markets. We're on a MACD buy signal, although very kind of elevated already. So again, that kind of limits the potential upside for the markets. Markets overbought on a relative strength basis. Again, stay long the markets right now. There's nothing to be concerned about. I was answering a tweet this morning. It's like, Lance has been looking for a pullback since 4,600. That's not true. We regularly talk about rebalancing risk and those type of things. And we did start talking about in July. We said, in July, markets were getting pretty extended here. So, hey, we're moving into the seasonally kind of the weak period of summer, August, September. You typically have some volatility there. We didn't get it. And that's not uncommon. Again, we've talked about this before, is that the thing about averages and statistics is that sometimes they don't do exactly what you're supposed to, because that's why it's an average. It's an average of years that didn't have a pullback and averages of years that had pretty big pullbacks. And what has normally happened in the month of August, September is you have weaker returns. But again, that didn't happen this year. We've got a lot of support for the markets, a lot of retail buying in the markets, a lot of professional investors trying to add exposure to portfolios. The real chase kind of in this AI market as of late has been kind of really been pushing stocks higher. For instance, if you take a look at AIQ, which is the Global X AI ETF, is at the highest, most overbought, deviated level that we've seen in that ETF since the peak of the market back in April, just before we had that correction. So again, we're seeing a lot of that same type of similarity, that AI chase in the space, kind of pushing the markets higher. Again, take a look at the market breadth over the last couple of days. It's not been great. Yesterday, we had just a few stocks, Tesla, Google, et cetera, driving the market higher. And that's why markets were able to close higher yesterday. But a big chunk of the overall market, if you take a look at a heat map, was red. So again, the breadth has not been real strong here, supporting this markets. But again, nothing wrong with that, but we are getting these very big deviations from means. We're 3 standard deviations above 50-day moving averages, those type of things. Just something to be cautious of. Doesn't mean the markets are going to crash, but again, just those type of deviations are hard to sustain. We're seeing the same exact setup, of course, if we turn over to the Qs, exactly the same type of setup. Qs had a good day yesterday because of Google and Tesla in particular. Buy signal, very, very overbought here. Last time that we were this overbought was back before that correction that we saw in early August. And then, of course, haven't been this overbought really since, kind of March and April of this year. So, again, these type of extensions occur on a regular basis. Just a good time to remember that when these occur like this, it really doesn't matter what kind of index you're looking at. They kind of all look the same right now. Just remember to take a bit of profits, right? This is the S&P 500 equal weighted index, much weaker performance than the overall market. This is exactly what I'm talking about. While the S&P's been hitting new highs for the last couple of days, RSP's been actually selling off. So that's that breadth. This is the equal weighted index, right? So a very different performance profile between the equal weight and the market cap weighted S&P 500. That's that breadth issue that we're talking about. It's a handful of stocks moving the markets. That's okay. It's just not that sustainable. So just again, be a little cautious here, take some risks, rebalance your portfolio. Doesn't mean sell everything, go to cash. Stay in the markets, stay participating in the markets. We're about to move into the seasonally strong time of the year, October, November, December. You're going to have Q3 earnings, which are going to be good, right? Estimates are kind of in line where they should be right now. Companies will meet and beat their expectations, probably around a 75% beat rate. That'll be supportive of the markets. Last quarter stock buybacks come into place. There's going to be a lot of buybacks. We are running at the highest level ever for stock buyback announcements on record, right? Well above the 3-year average right now. Companies have just gone crazy with corporate buybacks this year. That'll help support the markets into the year. And of course, you do have a lot of professional managers offsides need to chase the markets to get their portfolios in shape for year-end reporting. So there's 3 key influences that'll help drive the markets in October, November, December. So again, stay invested. Just because we're looking for a correction doesn't mean anything other than we're just looking for a little bit of an opportunity to put some more capital to work in this markets. That's what you need to know before the bell this morning.